Then we come to org and startup costs. Okay. Okay. This is the logic. We'll go through this once we've taken some questions. Okay. Now, what I want you to understand is this. This is very, very important. What is not regarded as startup? So, what is startup? Startup would be legal services, accounting, incorporating the business, fees for incorporation, costs of organizational meetings. These are all org cost. What is not regarded as org cost? This is really, really important. All the money that you're spending on raising capital, that isn't org cost. So cost of issuing, selling stock, raising capital, underwriters commission, these are not org costs. That's the cost for raising the funds. That's not the cost of organizing the business. Startups generally would include all the costs to prepare to enter it. So like the example that Natalia, when you have market research, advertising, brand owners, uh, any cost that you're incurring to secure customers, hiring employees, all non-capital costs, all of that we startup cost. Generally, after the business starts, you cannot say that it's a startup cost, and any capital asset that you're purchasing can also not be regarded as a capital cost. So, what is the rule? The rule is if you're a small business, how do I determine that? If you are till 50,000 of startup costs that if you're incurring, I will allow you to deduct a major one-time deduction of 5,000 in the year when the business starts or you incur this expense. And then, so this is each of org and startup. So you put org in a separate bundle, startup in a separate bundle. All deductible expenses should incur prior to the start of the purchase of the asset only for partnership or corporation. I don't give it to you for sole proprietorship because these are disregarded business entities. So this is really. So what will you do? The moment 50,000 is higher. So the moment I feel that no, now it does not seem as if it's a really low startup or a small startup, I start pulling back that one time offer of 5,000. So if my, let's assume if this was 53,000, then I will reduce 3,000 from here and one time you will get only 2,000. So what will be your expense? You will take out of 53,000, you will get 2,000 this year. And then whatever is the balance, which is 51,000, you will split it in 180 months and you will multiply it with the number of months that is applicable for the current year. That means, guys, after the initial startup year, every year, ideally, you should get 12 months worth of amortization, depending on 180 months period. Okay, so I think this is a little premature. Let me finish this example. Let us just do a couple of questions. I think this will really make sense. Please be very attentive and then answer the questions. Helix Corporation started business on 1st of July. Be very mindful of dates. Okay, so mind the dates. Last year, and has elected to amortize its org expenses of 60,000. So you have only one nature of expense, which is org expenses of how much? $60,000. The maximum deduction that can be claimed for this expenditure in the year 2 would be how much? This is a simple concept. Let me see how many of you get this answer correct. What would be the answer of the 15th question? Again, not a very difficult question, but a tricky question. So what would you say? Okay, that one time, so I'm talking about year 1 and year 2. So year 1, I could have got 5,000 had my expense been till 50. The moment my expense crosses 55,000, I get no first time allowance. And the entire $60,000 I'll have to amortize over 180 months. And in the first year, I would have had 6 months from July till December. In the next year, this is second year, okay? This is not the first year. I will have full 60,000 for 180 months, over 180 months or 12 months. So the answer here will be 12 months. So be very mindful of the startup here and probably a couple of years thereafter. So years 2, 3, 4, ideally we'll have full years amortization. Year 1, year 5, it depends. So what is the answer for this? 4,000, right? See, Mitali, did you understand what mistake did you do? You took it for the first year and not for the second year. So just be very mindful. The moment or startup cost exceeds $55,000, you get no benefit of the first year 5,000 lump sum for 1,000 in the initial year of startup. Secondly, ideally for second, third, fourth years, you will have full 12 months amortization. Only the first year and the fifth year, you will have to check. Generally, do not question you on the fifth year. First year, you have to be very careful. But second year, third year, it has to be 180 months. It's a very simple concept. Identify the cost, which is org, which is startup. Total 50,000 if it's an org cost, you will get a lump sum deduction of 5,000, and then whatever is remaining will split over 180 months, starting from the month in which either the business starts, or the expenses incurred. Okay, so deduct 5,000 each of org and startup. Each 5,000 will be reduced by the amount by which the org startup exceeds 50,000, and any excess is amortized over 180 months, starting with the month active trade or business begins. Let's layer this question up a bit. Let's go to the next question. The goal of the question is, if the taxpayer chooses to amortize its org and startup expenses over the minimum 180-month period, how much can the taxpayer deduct as an amortization expense in year 2? Okay, 1 second. Vishnu, unmute yourself. What is your question?
So the first time deduction of 5,000 when the conditions are met, like the either org expenses or startup cost does not exceed 50,000, it is only on the first year of the organization.
Yes. Nothing beyond the first year. Okay. Now look at this question. It's a good question, guys. Okay. During November and December of year 1. So this is my current year, which is year 2. I am discussing everything. Okay. I'm trying to take a concept and discuss it through and through. You will have to understand in your question paper which year is it. Answer for 15 is 4,000. See. Okay. Now see what they're saying. During November and December of year 1, the taxpayer incurred $60,000 in potential market feasibility costs. So let's talk about org cost and let's take startup cost. So market feasibility will go where, guys? Market feasibility will go where? It's a startup cost. 72,000 in legal fees for setting up the corporation. This is the org cost. 21,000 in advertisements for the opening of the new business. Again, this is a startup cost. And 18,000 for the purchase of the equipment. This you're going to ignore. It's neither startup nor an org cost. Now, so I get a total of 72,000 here and a total of 81,000 here. Dorothy began business operations on Jan 1, year 2. Oh, great. So this year will be the full year. And both of them are above 55,000. So you don't get a one-time $5,000 deduction. So for the first year, you take 7. So you can actually add up these two also because there's no difference. So it is 153 divided by 180 into 12. Just figure out how much is it. You can do it separately also. It's totally up to you. How much is the answer? So you can do this 72 divided by 180 into 12, and then you can do this separately, and then you can add it. It's up to you. How much is the answer? I think the first one is 4,800, next one is 5,400, total is 10,200. These are simple questions, guys, okay? But this is where GAAP and US tax and US GAAP differs, because GAAP would want you to expense all of these in the year of in the first year itself. Tax will not let you take the benefit in the first year. It will give you a major boost only in the year of startup, provided it's a relatively small startup. Henceforth, you will have to take and amortize it, bleed it into your tax return over the next 50 years. One more question I want to do from here. But see, you should be prepared to answer a sim also in this area. It's a pretty simple sim if you get it. The first thing is identify which cost to consider, then break it into startup and or cost separately. Take 5,000 away from each one of them and then amortize it over 180 months starting from the month. Please remember, it's not the full year, it's starting from the month in which business is initiated or in which the expenses were paid. What is the maximum deduction that the taxpayer can claim this year for the org and startup costs? A taxpayer began a calendar year business on April 1, year 1. In February of the current year, the taxpayer incurred and paid 8,000 to secure suppliers and customers. So this must be startup. At the end of year 1, 12,000 was paid to the taxpayer's accountant to prepare the financial statements. Now, this I am not going to tell you. You guys tell me the answer. How much do you think we can deduct in this year? This is not a startup cost, right? This is your accounting cost after the business starts. So you will take 5,000, big sum this year. So you'll start with 5,000 and then you will split the balance in 180 months. And in this year, you had how much? You had 9 months. How many months? You had 9 months. So add this portion, how much it is coming? Tell me the answer. So I think it's 150. So $5,150. Is the concept clear now? I think there's nothing else apart from this that can ever be tested. You know how to split 5,000 cost if it is less than 50,000. You know how to split the cost if it is more than 50,000. You know how to identify whether it's a startup cost or an off cost, and then you know how to have a tax treatment of this. Okay. So step one, uh, yeah. So Vishnu, that will come with time. Okay. Or cost, actually, or cost is that dull cost. Okay. Think about all the cost for just starting up the business. So you pay to the accountant. Why? Because you have the first time Zoho that is being installed in your for your mailing. Then you pay to the lawyer or the CS because you want to register your business. So your first time incorporation of the business. So that's all cost. Just legally getting their business into existence. So all the legal and the lawyers or the accountants fees, that is all cost. But startup cost will be everything else, which has to be like one-time expense before the business comes into existence. 1 second. Rashi, unmute yourself. What is your question?
Ma'am, if the cost exceeds 50,000, then I will not take the deduction in the first year and I will take in the second year.
No, no, no. Okay, let's say the cost was 54,000. Okay.
Yes.
So if it is 54,000, what does the rule say? The rule says take 5,000 big time in the first year itself. But if this 5,000, if the startup cost is more than 50,000, then dollar by dollar, whatever is the excess, you reduce it. So 54,000 is how much higher than 50,000? 4,000, right?
4,000. Yes.
That means I will get a lump sum of 1,000
In first year.
for only in the first year. This
Okay.
5,000 can only be in the first year. So out
Yes.
of 5, I've reduced it, phased it out. Now I have 1,000 from the first year. So now I'll split it into 1,000 and 53,000. So 1,000 will be in the first year and the balance 53,000 I can split in 180 months. Let's say this year the business started in July. So in this year, this will be till July, from July to December. Have you
Okay.
understood this?
Yes. Yes, ma'am.
Then you answer me my question. Let's say the amount was 48,000 and you spent it on 1st of April. Tell me what will be the cost. Tell me how to go about it.
Ma'am, full 5,000 will be allowed.
Very good. And then,
Then in the next year, 40, 40,
no,
40
this year is not finished. This year is not finished. This year is full 5,000 plus
plus
plus 43,000
43
divided by 180 into,
80
let's say
into
it
4.
started in April, it will be 9 months.
Okay.
Next year it will be 43,000 divided by 180 into 12. Have you understood?
Yes. So that means that 5,000 will be allowed in any case if my whether my
If it is
expense.
not more than 55,000. So within 50 and 55, I'm going to phase it out. So if it is, okay, same question if I tell you. Let's say if I now tell you it was 52,000. Tell me how will you solve it in year one? And let's say your business started in October 1, year 1. Tell me how would you account
Yeah,
for this?
so for 52,000 in the first year, I generally get 5,000, but here it is exceeding for 2,000. So
Hmm.
I will get a full 5,000 plus.
No, no, you will not get full 5,000. You will get 5,000 minus 2,000. You will get 3,000. See, first year is 5,000. It will be
Yes.
phased off dollar by any amount by which the total startup cost exceeds 50,000.
Okay. So
So
here it is.
here it is
Is
excess
it
by 2,000.
two? Yes.
So you'll reduce it by 2. That means
Yes.
out of 5, you will get a lump sum of 3.
Yes.
And then, so out of 52, you've already taken 3 in the first year.
Yes.
That means now 49,000
49,000 for.
into 3 months, October, November, December, you will take in the first year itself.
Okay.
Have you understood?
Yes, ma'am.
Do it for 53,000. Tell me.
So for 53,000,
And let's say I'm starting in August 1.
okay, so for 53,000 in the first year, I will get only 5,000 minus 3,000, 2,000,
Hmm.
and for 5 months.
Hmm. August, September,
So,
October, November, December. 5 months, huh?
yeah, for 2,000, I've already 51,000.
Very good. So 51,000, you will split over 180 months.
It
This
into
year, you
five
will get
months.
for 5 months. And
Yeah.
henceforth, from the next year onwards, you will amortize how much? Only this 51,000 now that is left, you will amortize it year on year. So year 2 will be 51,000 divided by 180 into 12. Year 3 will
Yes.
be the same. Year 4 will be the same. Year
Year
5
five will be
will be for
different.
7 months.
Yeah.
Have you understood?
Yes, ma'am.
Yes. So again, see, I'm going, this was the last question here, right? 1 second. Yeah. So I am going here. See, I am reading this now. Uh, you can expense 5,000 each of organization and startup costs. This allowance is reduced dollar for dollar when total cost exceed 55,000. In other words, no one time $5,000 deduction if org or startup cost exceed dollar 55,000. Is that clear? The balance may be capitalized and amortized. So how would you capitalize and amortize the balance? Each 5,000. So deduct up to 5,000. The reason we are saying is up to is this can come down from 5, 4, 3, 2, 1, 0 of each org and startup separately. That means in 1 year you can take maximum 10,000 for 5 org cost and for startup cost. But you can do this only if you're forming a partnership and corporation. If you're doing it for sole proprietorship, it is not allowable. Each 5,000 will be reduced by the amount by which the org or the startup is exceeding $50,000 respectively. Any excess is amortized over 180 months, starting with the month active trader business begins. That means this year's expense is going to be 5,000 plus the number of months business started by 180 into excess expense over 5,000. Okay, one question I want to give you guys. This question, okay? I'm changing the figures. Okay, instead of 72, let's say this was 36,000, and instead of 81, let's say this was 52,000. Now tell me what will be the org and startup separately that will be taken. Okay, year one and year. So tell me for year one and tell me for year two. And year one will be org and startup separately, and year two will be org and startup separately. Is that okay? Tell me what will be the figure. Others can pitch in, guys. This is in which month? So this is for the full year, okay? Instead of full year, let's say the business started on 1st of April, okay? Instead of full year, let's assume the business started on 1st of April. Yes, guys? Tell me the first figure. For org, for year 1, how much will I take? Org, year 1, how much will I take? 36,000 is the org cost. In year 1, business started on 1st of April. No, Vishnu. No. Yes, Kannan, very good. Unmute. Explain.
Full 5,000 plus 31,000 divided by 180 into 9
That
months.
is less than 50, right? So you will take full 5,000, then
31,000, which is the balance amount, divided by 180 months, multiplied by 9 months, which is the period from April to December.
very good. So this is 1550 plus, sorry, not 55. This is 6550. Tell me for year 2. 9 months, the business started on 1st of April, no? The business started on 1st of April. Tell me what will be the amortization for year 2 for the org costs. For year 2 for the org cost. Year 2 for the org cost. Very good. 2067. Now this will be for the full year. So how did you get that? You will take 31,000 and you will divide it by 180 and you will multiply it by 12. Is this clear? Everybody? Yes, I changed the date to 1st of April. Okay? The starting date is 1st of April. Okay? Now tell me the next question, guys. Startup cost was 52 in year 1. The business started on 1st of April. 52 in year 1. The business started on 1st of April. What is the startup deduction that will be given for year 1? Assuming 52,000 was spent. Yes, very good. Rashi, very proud of you. Tell me, how much is the answer? 5450. How did you arrive at it?
Ma'am, out of since it has exceeded 50,000, so I will get only 3,000 there.
Very
And since I've already got 3,000, so I am left with 49,000 for 9 months. So 49,000 into 9 divided by 180 plus
very good.
3,000, it's coming 5450.
And what will be for year 2?
Year 2 will be 52,000, no, 49,000 for 12 months.
Very good. So it is 3267. Is this clear, everybody? Is the provision clear? You may get a small sim from here. It's a simple question. Okay, Mitali, unmute yourself.
Yes, ma'am.
See, in this question, when I told you 52,000, what was the deal? The deal was, I'll give you 50,000 provided your total startup cost should be less than 50,000. Yes or no? I'll give you
Yes, ma'am.
5, and the moment it increases from 50, every dollar in which it increases by 50, I will reduce this 5,000 lump sum deduction.
Okay.
So
For
if it
every
is
dollar.
52, see, if it is 50, so, okay, let me take it like this way. Okay, so let us see, it is 50, 50, 51, 52,
Hmm.
53, 54, 55, and 56. Okay?
Okay.
So when it is 50K, I'll give you full 5,000.
Yes.
When
ma'am.
it's 51K, I was supposed to give you 51, but you exceeded it by 1,000. So I'll reduce this 1,000. You will get only 4,000.
Okay.
When it was 2,000, it exceeded it by 2,000. I'll give you only 3,000. And so here it will become 2,000. Here it will become 1,000. Here it will become 0. Here it will become 0. Here it will become 0. So the moment it touches 55, I have phased out completely 5,000 of lump sum deduction. And then you will get 0 lump sum. So the moment it is, okay, I don't know if this makes sense. One sec. Let me just, where are we? We are here. Okay. If I have to summarize this, step 1, consider whether it's an org cost, whether it's a startup cost, or whether it is neither org nor startup. So if it is neither org nor startup, you're going to ignore it.
Okay.
If it is org, if it is startup, collect it in separate buckets. So add all, collect the total org cost, add all, collect the total startup cost. Now, if it is less than 5,000, if it is greater than 5,000, if it is less than 50,000, greater than 50,000 but less than 55,000, and if it is greater than 55,000. There are three cases. In this case, you will get 5,000 plus remaining divided by 180 into number of months from startup or business begins, whatever. So this is a lump sum plus you get it for this year. If it is this, then you will get 5,000 minus excess above 50,000. And then you will add total cost minus disallowed. Whatever is the excess, you will amortize it over 180 months into number of relevant months in the year.
Okay, ma'am.
And if it is the third case, you will only take total divided by 180 into number of months from startup.
Okay.
Is this clear?
Yes, ma'am, clear.
So if I tell you that the cost was 54,500, okay, 54,500, tell me how much will it be allowed this year? Tell me the figure for this year. Let's say the business started up on July 1. Tell me what is the figure this year that you're going to take. Others can pitch in, give me the answer in the chat panel. Yes, guys? Yes, Mitali, tell me how much are you going to take?
I'm doing.
I'm going to start with 5,000. But out of this 5,000, I'm going to disallow 4,500. Isn't it?
Ma'am, we'll have to disallow 4,500.
So I will get lump sum 500.
Yes, ma'am.
And then out of total of 54,500, I have disallowed 500 I have already considered. So what is left is 54,000.
Yes, ma'am.
So this I will divide by 180 and I'll multiply by 6 this month. Yes or no? This year.
Yes, ma'am.
So it will be 500 plus whatever this figure is. 1,800. So this year you will get 1,000. Is that clear?
Yes, ma'am.
Who wrote 3,000 before this? Ritika. Ritika is okay. Yeah, everybody. Is this clear? Mithali, is this clear?
Yes, ma'am, clear.
Okay. This is the only item which may be questioned in SIMS.